Welcome to the Toronto Real Estate Podcast. Today, we are going to get into the Toronto real estate market. We're going to do a 20-minute update. We do this every month. Today, we have joining us Kori, Marin, co-founder and broker at Fox Marin, and of course, myself, Ralph Fox, broker of record at Fox Marin. Thank you so much for joining us. Before we get into these numbers, and they are interesting, I'd just be remiss to remind everyone who's watching us to please be sure to hit that like or subscribe button. And if you have any comments, we'd absolutely love to hear from you. Just let's keep it above the waist. Okay, guys? Kori, so great to have you here. Let's talk about the Toronto real estate market and what the data from the Toronto Regional Real Estate Board is that came out with earlier today.
Yes, so we're going to focus on the April numbers that were just published.
Yeah.
And for the viewers out there, I just want to be clear that we are focusing on the 416 and we're not focusing on the outskirts of the city being the 905 and the 705 today. Just want to keep that in mind as we're diving deeper into the numbers. These numbers are a little bit more dramatic than we're used to reporting on. So gear up and get ready for that. With that being said, with only 20 minutes on the clock or less now, let's jump in. So this first slide here is showing monthly reporting, looking at the month of April 2025. And we're looking at the four major asset classes across the board in the 416: detached homes, semi-detached homes, townhomes, and condo apartments. And you can see here on this table that we're looking at the average sold price and the average sales volume, meaning the amount of transactions that are moving through the system every month. And you can see here in the table in the second column that we're definitely seeing some price adjustments. So the average detached house in the 416 is now selling for $1.7 million, which is down 6.8% versus last year. Semi-detached homes are selling just under $1.3 million, also down 7.2% versus last year, which is a bit of a shocker, seeing that Ralph and I have both forecasted, and I still believe to be the hot commodity of 2025. Townhomes are slightly up at just 0.7% in terms of price versus last year at this time, hovering just over $1 million. And of course, condos, no surprise here. We're going to dive a little bit deeper into this. Price points are down 7.3% versus last year. And as we hover over to the right-hand side of this table, you can see also that sales volume is down across the board with less detached home selling at 2.2%. Semi-detached houses up about 5.4% transactions versus last year. Townhomes down 22%. And condos down almost 30% versus last year at this time. Ralph, anything you want to add to this slide before we move on?
Oh my gosh, there's a lot of negatives here. Not often that you see this, and we certainly haven't seen this type of negativity since very, very early days with the onset of COVID. So very interesting to see what's happening here in the market.
So let's look at all home types combined on this next slide here. So we're combining all of those assets in one table, and we're looking at some key indicators here. So the number of transactions. So transactions across the board in the 416 are down 23.3% versus last year. Less deals are being had for both buyers and sellers alike. New listings, however, are up 8.1%, meaning sellers are looking to sell their real estate. More people are listing than they did last year at this time. And active listings, this is a big whopper here, is up 54%. So active listings means the amount of inventory that is not moving through the system month over month. And I often refer to the fact that it's collecting dust. It's collecting a shelf life. It's sitting there and it might expire soon, up 54% versus last year at this time. Big time. Prices overall down 4.1%. And when you see that number, the big picture, it's not really surprising with everything that Canada has been dealing with in 2025 and 2024. So that's not crazy, but of course, particular segments of the market have been hit harder and other ones are doing quite well. And the average days on the market is definitely up 31.6% versus last year, meaning properties are taking longer to sell. And of course, the condo market is eating into that and driving that number up. All right, absorption rate. Ralph, this is always your area. Why don't you take it away?
This is something we track every month over at Fox Marin. It's a really good indicator just to talk about at a high level how the market overall is performing. So when we look at this, essentially we're taking the abstract idea. If you took all the properties that are currently on the market at the current rate of sales, how long would it take every property to sell? So 4 to 6 months is considered to be a balanced market. And right now we're sitting at about 4.89 months of inventory. We always like to give reference to this. Manhattan was 188 days, and the average price was 7.8 months of supply. So we're still not doing nearly as bad as a lot of other major cities, Manhattan included. And just by reference, again, in comparison to where we were at the height of the market in end of 2021, early 2022, it was about 3 weeks. So that just gives you an idea of where we were at the height of the market, where we are today, and where some other larger markets are. So things may not be still really all that bad as they are.
Yes.
Yes.
All right. Well, we pulled together some additional graphs for you because it's always helpful to see things in a visual way. At least it really helps me understand this. So these next graphs here show total residential transactions. And this first graph here is showing year over year. So it's comparing April 2024 to April 2025. And you can see, as we mentioned in the first table, the transactions are down just over 23% versus last year. Less people are buying real estate this year than they were last year. And if you look on the right-hand side, this is seasonally adjusted. So it's comparing last month, so March 2025 to April 2025, which is helpful just to show a little bit of trend line. To me, when I look at this, we're up 1.8%. But of course, March is just always a slower and sluggier month than April anyways, regardless of economic climate and elections and interest rates and all the things that the Canadian market's been bombarded with. So it makes sense to me. There's a little bit more transactions happening in April versus March. March is an ugly month. It's my birthday that month, so I can tell you with all sincerity that it is still winter in March every year. So a lot of people wait to the spring market, whatever that means. And we can talk about that on a different podcast, but they wait to hold back their quality inventory for April, May, and early June.
Interesting time indeed. Like we're looking at a slowdown that we haven't really experienced for decades in the Toronto real estate market overall.
Yes. Total new listings, you can see here on the left-hand side, again, comparing year over year, April 2024 to April 2025. So you can see that we have just over just under 19,000 listings. So we're up 8.1% versus last year. So more people are listing their properties. And of course, obviously, a lot of this is condo supply. So anyone that's been holding on to a condo or an investor or a small investor, they're looking to dump their condos, particularly the smaller little guys, your studios, your 1 bedrooms and 1+ dens. We can talk about inventory on the condo sector soon. And this next little chart on the right is percentage of sales to new listings ratio. So you can see that in April 2024, we were at 42% of sales compared to the amount of new listings coming through. So that's the amount of sales that were being chomped through. 42% of that inventory was being eaten up. And in April 2025, we're only eating up 30% of the supply. So that's a lot more sluggish movement in the market. So down almost 30% versus last year. So this is like a lot of negativity to be reporting on. And to be honest, I'm really not used to having to use a lot of negative terminology when it comes to reporting data. So I'm a little bit tongue-tied, plus trying to do this in under 20 minutes. But these are really important graphs for you to know and understand, particularly if you're looking to buy or sell real estate in 2025. Property DOM, property days on the market. So you can see here on the left-hand side, again, comparing this year to last year in April, properties are sitting on the market longer. It's taking about 22% longer to sell. And then on the right-hand side, which is just a different way of framing it, which is called listing days on market, how much time did it take for that, particularly that listing, to sell that real estate when you're not compounding how many times that seller has tried to list that property under various different MLS numbers. And that is up 31%. So again, sluggish. We're not buying as much real estate. We're listing more real estate, and any real estate that is selling more slowly. Anything else you want to add, Ralph?
No, I think you're doing a great job. A plus.
Okay. Quickly here, these are seasonally adjusted figures. This is going back a decade. Seasonally adjusted numbers are important because this takes away the obvious volatility in the marketplace when it comes to the seasons in Toronto and a lot of Canadian cities. So this helps eliminate that so that we can see the trend line both for sales and adjusted sales based on seasonality. And you can obviously see here that the trend line is going down regardless of the season. And you can see the ups and downs over the last 10 years. And this is not a pretty chart because you can look at the right-hand side of your screen and see that we're pretty darn low compared to where we've been in the past. This next chart here is the home price index. So this is a more sophisticated statistical model. This combines quantitative and qualitative elements of property sales so that we don't have one or two listings that drag averages up or down. This sort of like helps smooth out the averages by using the home price index. And again, you can see that we had that big run up when interest rates were at nothing and cash was free basically to borrow. You can see that run up in 2020 up to 2021. And then we start petering off in 2022. And now things are smooth per se, but we're probably trending down. And as I mentioned, one of the top slides, we're down in terms of price overall in the 416, 4.1%. Let's go into inventory because this is super helpful. So months of inventory. So what I did to prepare these slides is I broke it up to look at 3 different asset classes. I want to look at detached, semi-detached, and condo apartments because condo apartments is definitely a different story and there's a different trend line happening in the condo sector of the city. So months of inventory for detached homes, we pulled a bar chart for you. I did this manually. Yes, I remember how to use Excel still. I'm always so proud when I create my own custom charts. And you can see here that we still technically are in a seller's market, moving towards a balanced market on the detached home segment with 3.5 months of supply in detached homes in Toronto specifically. And just as a reminder out there, not that it's rocket science, but detached homes tend to be the most expensive asset of the 4 asset classes that we analyze on this podcast. But that's a big chunky amount of detached homes out there on the market for sale right now, effective April 2025. Obviously, if you're looking at this on YouTube and you're watching along with us on Twitter, you can see that the trend line has been going up for the last 5 years.
And it is the most coveted asset of Toronto real estate. So,
oh yes, that's the dream, the detached home.
So to see that is really telling of what's happening in the market. And it's really going to be important to keep our eyes on months of inventory for all of these asset classes to understand where this is going.
100%. And then when we talk about at the very end of this, I do want to talk a little bit about some of our recent sales because they seem to be like trending against what the data is saying. So I want to talk about that too. So these are semi-detached, which if you've been listening to the podcast, you know that Ralph and I are betting on the semi-detached category in Toronto for 2025. We think this is the hot category, and you can see that we have far less supply. And again, this comes down to basic economics of supply and demand. We just have over 2 months of supply, but more supply than we're used to in this category. However, how much quality supply do we have in this category? Not a lot in incredible neighborhoods where families want to live. And still, it's very expensive to buy a semi-detached house in Toronto, regardless of what area of the city you're exploring. So just over 2 months of supply, and we're going to return back to the semi-detached house shortly with some anecdotal information. And then here's the nugget here. This is months of inventory for condo apartments. Okay. Now you know when you guys call me about selling your condo and I'm like, probably isn't a good time. You know that I am not just making that up. Here is a chart to show you. This is just under 7 months of supply. When I looked at the May numbers, the early May numbers, we're at 7.01 months of supply. Guys, this is not a pretty picture for condos. And we've seen a lot of your feedback from our last podcast about pre-construction condos. and condos overall as well. So this is not a pretty time for you guys. And we own condos too. So we feel it and we hear you. It's going to take a while for us to correct this segment of the marketplace per se. Ralph, do you want to add anything to condos?
No, it's going to get worse before it gets better, and it's not getting better for a while.
Exactly. We just tell you like it is. So why don't we just speak quickly before we go into the 5 indicators that I want to review? Let's talk about the 2 sales that we had last week. Ralph, why don't you talk about the one that we had in Leslieville, and then I'll talk about the Playter Estates one.
Yeah, so we had a listing, one of our team members on Degrassi, and it did exceptionally well. It had a ton of showings, a lot of activities. I think we had 14 offers in
12.
total, 12 offers in total, and it sold 30% above list price. It was just a monster number, and it felt like the type of activity and the type of sales number that you typically would see in the height of the market, not necessarily something where you'd be looking at these type of stats.
100%. We also had another sale in Playter Estates, which is a high demand area around Broadview and Danforth. We listed a semi-detached property on Logan Avenue. We listed for $1.495 million. We had over 60 to 70 private showings during the week. Over 100 people came to the open house easily 100 people. And then we had 9 offers on the property, and it ended up selling over $1.9 million. And let me tell you, in this particular scenario, no one was talking about the election. No one was talking about tariffs. No one was talking about interest rates. No one seemed concerned about the market. It was all so positive. I felt like I was in a time warp. And like you said, Ralph, it felt like we had flipped back to COVID times where things were in hysteria. And so there are segments of the market that are blowing up regardless of what this data is telling us today. So I just wanted to share those quick anecdotes while we still capped under 20 minutes for our market.
The other caveat I'd just like to add is we had a condo listing that we didn't think would sell or very quickly anyways. It was the typical 1-bedroom investor condo downtown Toronto. We didn't stage it. We just put it out there at a reasonable price, but not a fire sale. That sold in 3 days. And we also had another condo, hard loft, that sold in 2 days on the market. So there are active buyers out there, and we're seeing a lot more coming back to the table, especially over the last couple of weeks, now that we're on the other side of the election. So never underestimate the demand that we could start to see picking up in the market. There is light at the end of this tunnel, just the timelines, I think, depend on the asset class.
I totally agree. So speaking of that, I want our viewers to pay attention to these 5 indicators as we move into the next 6 months. Of course, we want to pay very close attention to what the Bank of Canada is doing with their interest rate movements and how much more increments will we get knocked down this year, if any. I want you to really be educated about the absorption rate and those inventory levels. These are really, really helpful to help formulating a plan. So you should be speaking to us or your buyer agent or your selling agent, in fact, about inventory rates in your asset class and in the neighborhood you're interested in. Consumer sentiment, market psychology, big time influences the outcome of the marketplace. And of course, we just finally survived the Canadian federal election. I'm so glad that's behind us. At least there's certainty as to what's happening with that, depending, even if you're on the other side of the issue. I think it's really good that we can just move on and focus on growing. Rental market pressures, investor behavior, we really need to be paying attention to that as well. That's a huge litmus test. And finally, will there be a listing surge as we're seeing right now? And will there be any recovery come fall 2025?
And I'm going to add one bonus indicator, the orange man to the south, and that dirty, dirty word tariffs. We'll see how that plays out. But we could start to see things start to slow down and come into a little bit more normalcy. You never know, but midterms are starting to come up in the US, and I think this is all going to have to get resolved sooner rather than later.
Let's get it resolved. All right. Well, thank you guys so much for joining. We really appreciate it. Please drop your comments down below. We like to get back to all of you with our feedback as well. Ralph, anything you want to close out with?
No, I think it's another interesting month and time to be in Toronto real estate. And if you have any questions or would like to schedule a call with us to talk about your situation, we're always here. Feel free to reach out, hit that like, hit that subscribe, comment, or schedule a call with us. And we're happy to talk to you about your personal situation.
Have a good day, everyone. Thanks, Ralph.